fraud has evolved, but purchasing and procurement fraud is still purchasing and procurement fraud. And I guess a little bit on the disappointing side is the countermeasures to that, so robust fraud risk management, are still very much as they were 20, 30 years ago. What has changed is the AI threats and shallow fakes and deep fakes, how CEO fraud in particular has accelerated in complexity over the last 18, 24 months. And I guess the other bit that's kind of really changed is the digital nature of organisations. Whether they're financial services or other, everything has been more digitised. So that whole environment is suddenly, one, there is a greater threat environment, but with kind of the overall digitisation, there's actually kind of more opportunity.
With over 30 years of counter-fraud experience in the insurance industry, Matt Gilham examines the implications of the new Economic Crime and Corporate Transparency Act for senior managers in large insurance organisations and outlines practical steps that can be taken to mitigate the associated risks. Welcome to the latest Cognitas Global podcast. We always stick to a theme of a life less ordinary, and today I'm joined by a friend and colleague whom I've known for many years, Mr. Matt Gilham. Welcome, Matt.
Good morning, Laurie.
And we're going to talk about a lot of things today, Matt. We're going to talk about how we met, some of the work we did together, your career in insurance and particularly motor insurance, and how you transitioned into the private sector. But more importantly, we're going to deal with an important subject today, and that's the Economic Crime and Transparency Act. I say new, 2023, but there are certain provisions around corporate liability that came in around the 1st of September 2025. So, Matt, welcome. I should open up by saying we first met, didn't we, when I was in the police many, many years ago, prior to 2010, when I retired. And I think we first met when the Insurance Fraud Investigators Group, IFIG, was establishing itself around the time when there was an emergence around cash for crash type stuff. And we got to work on a few little jobs together, and you kindly invited me to some events, and that was my entry really into the insurance world. What you've been up to since then?
Yes, so if I think back, that must have been more than 20 years ago, which is absolutely terrifying. And you're quite right, it was, I think at the time I was Deputy Chairman of the Insurance Fraud Investigators Group. I think we got first talking to you with your background kind of linked to financial investigation, etc., which is within the insurance space. Now, as with all fraud, it's following the money. So I think that's where we first spoke, and that it evolved into, I guess, kind of a mutual interest in projects around deep data analytics and forensics and how that can help flush out the money trail. So a lot's happened in those kind of like 20 odd years. For the last 3 years, I've been running my own consultancy company. So I consider myself to be what I call a reformed head of fraud. So after 22, 23 years working in insurance, and I guess an overall career of 33, 34 years in counter fraud, moved from being within the corporate environment to running my own, I guess, boutique or niche consultancy, looking at not just the insurance fraud space, but the extension into corporate fraud and how that can impact kind of larger organisations.
And have you found, please feel at liberty to mention your company, of course.
Yeah, so thanks so much. So the company is known as Whitelk Consulting. It's kind of all based around a very strong connection to Scandinavia. I worked there for 2 years investigating corporate and internal fraud. So the Whitelk theme, there's quite a lot that stands behind the brand. I'm sure like yourself, Laurie, I couldn't have set up my own company if it wasn't a brand that I could stand behind.
Well, transitioning from a career, for me in the public sector, for you in the private sector, is a big jump, right?
It is, yes, absolutely.
It's an important one because I think we've got a strong role to play now in the way that we can offer some of our experience and services to organisations. We'll talk more about that later. But how did you find that transition when you left the company that you were working for and then moved across into working for yourself, doing the job that you do now?
It's actually my third period doing consulting work. Before I moved into insurance, round about the time of the millennium, I'd worked for a couple of counter-fraud consulting companies. And you know me, I'm not a 6-foot-tall ex-customs or police officer. So my natural bent was always around kind of like data analytics and kind of almost like undercover internal auditing, if you like. So that was my first big phase in corporate fraud prevention and investigation. After 5 years in insurance, then had another short period working for a forensic accounting firm. So again, on the consulting side, both working with clients and bringing clients in. But this was my first opportunity to do it on my own, and always been encouraged by contacts, friends and family to at least give it a go. So when the opportunity arose, there was a reorganisation at work. It's an opportunity I leapt on. So the transition in some ways was easy, having done the consultancy piece before, having enjoyed it, but the opportunity to actually build and run something myself was something I just couldn't turn down.
And how would you say that you've seen the fraud landscape change over that time period to where it is now? I mean, how would you really sum up that transition really from the threats that you were dealing with 20 years ago to the threats that you're dealing now?
That's a really good question. So in many ways, nothing has really changed. Now, fraud has evolved, but purchasing and procurement fraud is still purchasing and procurement fraud. Internal or insider threat, whether it's kind of theft of data or inserting false payments into payment processes, it's still very much the same. And I guess a little bit on the disappointing side is the countermeasures to that, so robust fraud risk management, are still very much as they were 30 years ago. And we're seeing that kind of reflected, I guess, in kind of current regulation coming out. But I think what has changed, particularly at the moment, is the entire environment. And obviously, we do focus on what the AI threats are now facing, and I'm sure we'll get into that, around shallow fakes and deep fakes and what that means. How CEO fraud in particular has accelerated in complexity over the last 18, 24 months with the use of particularly to kind of deep fake technology. We've also got the changing kind of financial environment, so pressures on both individuals and companies. Ever since COVID, there's just kind of far more there's a higher level of threat on an inherent basis. So be it internal fraud, external attacks, or kind of collusion. And I guess the other bit that's kind of really changed is the digital nature of organisations, whether they're financial services or other. Everything has been more digitised. We moved to we've got digitised documents. We've got straight through processing. So that whole environment is suddenly there is a greater threat environment, and specifically this year I'm hearing more about state actors. So that fraud is funding, the main stake actors that I think we're all kind of potentially concerned around. But with kind of the overall digitisation, there's actually kind of more opportunity. So while some of the fraud threats are very similar to what they were, so kind of previously a paper invoice being inserted into a payment process, whereas now it's digital insertion, or a false payment instruction being inserted into a treasury transaction. Now it's the use of deep fakes to convince someone to put through a fabricated payment.
And what about regulation compliance in terms of where it was 20 years ago and where it is now, and the pressure that's put on the industry? Particularly, let's talk about the insurance industry. Obviously, that's what you're here for today, to really discuss and get under the skin of that, particularly as far as the new requirements for the Economic Crime and Transparency Act, ECTA, as we'll call it. So how do you see that whole compliance and regulation issue changing?
Well, this has evolved rapidly. We first saw the focus on corporates having greater responsibilities for corporate criminal offences and failure to prevent with the Bribery Act back in 2010. Then we had the Criminal Finances Act and the failure to prevent the facilitation of tax evasion, the corporate criminal offence that just trips off the tongue, as it were. And now we've got the Economic Crime and Corporate Transparency Act, coupled with the ongoing, particularly for a financial services or regulated company, the FCA's expectation kind of around financial crime. So I think the focus is really coming down on of companies, particularly larger companies. We are also seeing the kind of like changing focus or evolving focus of a cyber threat, fraud threat, AML threat, all converging. And with the governance top-down economic crime strategy, where kind of I understand a new revision will be coming out early next year with a kind of a bigger focus. Requirements on the various sectors, be it insurance, telcos, banking, on their individual sector charters. I think the expectation to manage fraud and corruption and bribery and cyber risk and, where's that linked into AML is just getting greater and greater.
Yeah, if you look at the cyber resilience bill and the requirement it's going to have on organisations, critical national infrastructure, and other organisations to ensure that there are mandatory procedures now,
yep.
That they have to evidence to show that they're putting in this preventative measures. I guess we can draw a parallel with the new Economic Crime and Transparency Act in terms of corporate liability and responsibility. And I guess, there may be people watching this who are not totally familiar that should be familiar.
Yes.
There will be people that are familiar, but how would you perhaps sum up the Act in terms of this corporate liability as it generally applies across organisational structures now, not necessarily just insurance? We'll move on to that.
Absolutely. So the in-depth nature of the Act, is being explored in depth by lawyers and large accounting firms. So we won't go into the detail, but very much, it's the application to kind of large organisations. There have to be predicate offences that are all detailed in the Act. And the real focus is it's kind of that kind of corporate accountability. So it's very much defining who could be held accountable within the organisation at kind of senior manager level. And I think the key thing with the Act is it really kind of introduces the benefit requirement. So where there is fraud that takes place, it's not the company as a victim, that where the company can be seen to have benefited, to really kind of expose that kind of corporate criminal offence. And I think the key thing that it does bring into play is the role of having reasonable procedures.
So without getting into the technical elements of the Act, I think Section 199 creates offence now for effectively an organisation that makes them responsible for fraud that's committed internally or for the benefit of the organisation by an employee or other
an associated
person. How do you see this responsibility manifesting itself in now what these corporate organisations are going to need to do and how they mitigate that?
Well, it really puts the onus kind of at senior management board level and senior managers to have in place the appropriate the reasonable procedures to show that they've understood and taken action to mitigate the threat.
So in terms of the reasonable measures that an organisation's got to put in place in mitigation, that's not defined in the legislation, but how do you interpret those and what guidance has there been around this?
So the SFO has issued some really clear guidance, and there's kind of six supporting pillars, very similar to previous failure to prevent, and it is kind of guidance around the reasonable procedures that firms should put in place. And I think for opposed to what we're talking about, things like training, culture, monitoring, awareness are absolutely kind of critical as part of those overall procedures.
Okay, so in terms of accountability, how does this impact the insurers?
There's two main ways this impacts insurance organisations. First, for insurers that are covered by the Act themselves, around their size and scale and operations, it's that they could be directly impacted by a breach, so they have to have their own reasonable procedures. We also then have insurers that are offering commercial insurance to other kind of large corporate clients, and they will have to kind of ensure that within their coverage, do they understand the controls that are actually in place by their customers in the event that there's an insurable claim underneath the policy.
So in terms of one of the mitigation measures you mentioned, training and culture, how is an organisation going to develop that?
So it's layered. So it just in terms of overall kind of employee and senior management training, also kind of employee awareness overall regarding kind of potential acts and kind of risks in the process with the company.
And that could be something like a LMS training type activity?
Absolutely. So kind of a core baseline of training. For senior managers in particular, something far more tailored around their specific responsibilities and the wider understanding of the Act and the risks and the procedures themselves. But I think very importantly, and this is sometimes overlooked, well, I know it's overlooked, is the training around, well, actually, what happens if the wheel falls off? So there is a potential event. Are we able to respond? Is it going to be a robust response? And very importantly, as it is a key part of the pillar around kind of training, culture and monitoring, so the response part is actually, are we as an insurer able to evidence that we have completed that part of the overall procedures. So whether it is to speak to the SFO and to help them determine whether there should be an investigation or there should be a prosecution as part of consideration of a deferred prosecution agreement, or as part of a defence were a prosecution to actually take place.
Historically, I think there's been a lot of generic type training, and this would apply to the cyber world and many other aspects of training, but clearly organisations operate in a different way. Insurance organisations will have different operations, different risks. How do you see the importance of making sure that training is nuanced for that organisation, or could it be generic?
Again, very good question. So from what I've seen, there's a massive difference between the plan on paper and the actual reality. And I'm keen to learn from yourself and your experience around particularly kind of cyber response and business continuity. And I guess the difference between an on-paper plan and what happens in reality is the ability to ensure there's kind of comfort in the roles they play. And very often what I've seen is kind of when insurers or financial services company respond to a larger fraud threat, so a corporate fraud, something that might be covered by the Act, is very often it's kind of the loudest voice or most senior voice in the room dictates response, which one, may not necessarily be the right advice, but two, immediately exposes C-suite in the event of something going wrong. So one, it has to be kind of give that assurance and comfort and roles. The second bit is not just about being generic. It's around actually doing this for a reason, which is to provide evidence around the assurance. So we can show we have completed this, we know it's robust, it's in place, it's embedded, and it's been tested. And in that way, actually then also supports not just the training element, but that is actually an effective part of the procedures.
So when we deliver cyber training, you would think that you could possibly deliver a generic cyber attack, and that's just not right for all the different organisations that we work with, whether it be critical national infrastructure, government, insurance sector, aviation, maritime, retail, have all required something much different to that. And I guess the insurance sector is the same. I mean, you've got all these different types of insurers operating in a slightly different way. So how do you see the need? Is it a real diverse need, or are we talking about just testing something around corporate level with the same risks?
I think it could be both. So at a generic level, insurers are very similar, and why they're at risk, particularly through ECTA, is they have a kind of a very wide business ecosystem, from acquiring new business through to managing that business through to claims. Probably one of the most complex business ecosystems there are. And within that, there's also kind of quite sophisticated, complex money flows. So the risk of an actual fraud that fits the bill materialising at a generic level is relatively high. So insurers can't say they're immune. But within that, you're quite right. Insurers will vary in terms of size, scale, the types of operation, but there will be different threats or kind of ways that this particular risk can materialise based on their line of business. So we know kind of motor operates in a particular way, but similarly for health, pet, travel, there could be different ways this could materialise. So it's worth, or it has to be, niche provision or adapting things, but within a kind of general level of understanding.
I mean, it strikes me it's very difficult. There must be fraud being perpetuated every day somewhere. How do you truly mitigate for that? I mean, is it possible, or are we talking about you're not going to prevent fraud by these mitigation measures, but you're just, in fact, showing the regulator or the prosecuting agency that you've done your best to prevent it?
Absolutely. So in many respects, you're quite right. Fraud happens on a daily basis within the insurance sector. It's a daily risk that's under management. But particularly when we're looking at ECTA, we're doubling down on something very specific. Around kind of it's to benefit the organisation, it involves an associated person. So it's a very specific scenario, hence why that adaptability of the train has to be spot on. So we've got to be careful not to say we're doing this to focus on those daily risks, but understanding where this could occur and having trainers say, actually, were an event to happen, how would we respond to it? Particularly on the initial discovery, we may not be entirely sure whether an offence has been committed or not. This is the reason why we need a robust response plan to say, actually, we've identified something that could be indicative of an incident, and managing it appropriately.
Whose responsibility would it be then to ensure that the mitigation measures have been put in place in an insurance company?
So that will depend on organisation to organisation. Where I've seen responsibility being allocated is either in second line risk and compliance or the legal team, but ultimately it will be the executive, the exco of the company and the board that are responsible.
And in terms of putting those mitigation measures in place now, you've got different levels of executive. How do you approach that? What would you suggest would be the best way that those different levels could be managing these mitigation measures? Would certain level of executive be responsible for certain measures and then the board for others? Would you train all of that group collectively, or would you look to train and exercise groups individually? I'm not familiar with the insurance industry and those levels. You've operated at those levels. So.
As with the types of clients you work with on the cyber and business continuity side, most organisations, or all organisations, will have some kind of response plan, whether that's kind of bronze, silver, or gold. And depending on the nature of the incident, it will involve different either local management teams, national management teams, or even a global response team. But ultimately, for a potential breach under ECTA, that there will be an expectation about kind of senior management involvement, whether that's delegated to a director of legal or a head of risk and compliance is potentially a moot point. But organisations have to understand how they will respond and who will lead that. But as I say, one of the kind of issues I have seen is when there is an attempt to respond to a fraud incident where it has not been practiced or kind of properly walked through, sometimes the loudest voice around the table wins and say not only does that expose risk of not responding correctly, but also that the C-suite are directly making decisions which may or may not be correct. Can I ask you a series of questions?
Yeah, go on then. Yeah.
So, Laurie, throughout my career in kind of counter fraud, having a fraud response plan is just one of those things you expect to have in place as an organisation. And if it's not there, there's an immediate kind of concern. But we've spoken about kind of the effectiveness of training. And I've been trapped in PowerPoint hell before in trying to roll these out. But I know you talk a lot about experiential learning and how that can help embed awareness and be more effective. So I guess just to kick off, can you tell me what you mean by experiential learning?
Well, I think what's happened since COVID, people need to be trained differently. There's all sorts of challenges around, are people located in the same place? Are they working from home? This whole hybrid thing. How do we train people using innovative, engaging techniques when a lot of people have just had death by PowerPoint over Zoom and over Teams? So the experiential learning is about learning by doing, and it's proven to, your cognitive retention has proven to be 70% higher than just this didactic PowerPoint type learning. So the idea really is that people learn by simulating a situation that they're realistically going to be encountering in their business. So that instead of having somebody address them a PowerPoint and then the training ends on Friday and by Saturday morning a lot of that's gone, what we're hoping is that the retention means that when they go back into work Monday morning, they're going straight into using the skills and knowledge that they put into practice. So it's more focused on the doing, learning by doing, rather than learning by being shown or told. And that's proved very effective. I mean, we've delivered experiential learning using the platform, the View 360 global platform, in over 40 countries. And I think it's just what people want nowadays. People have shorter time in which to learn. Businesses and people are really busy, but training underpins the requirement for increased productivity, staff retention, increased skills, increased revenue for the company, much more effective operational effectiveness. But often people are too busy to train. So how do you resolve that problem? We found that by, in our case, using the experiential learning platform.
So I think the training is one thing. I think the other bit I'm particularly interested in evidencing, I guess, the effectiveness of fraud response is how to actually kind of evidence it took place. So you mentioned typical learning management systems where you're going to get a fabricated digital certificate at the end of it and say, oh, somebody's done it, even though they flick through the sides. How does this work in terms of being able to evidence that there's actually been effective training as opposed to just a tick box exercise?
Well, I think the last thing organisations want are consultants coming in telling what they should or shouldn't be doing, because I think that, you know, our own philosophy is the way that we design learning is that the information and the evidence comes from the organisation itself. So they are identifying their gaps where they need to enhance policies and procedures. So for me, the important thing is to look at the organisation, look at what their operational needs are in terms of their learning needs, and then design the training that meets those learning needs with key learning objectives based on and mapped to their policies and procedures. And then when you exercise that in a meaningful way using experiential learning, and you're delivering media and situation that reflects their true operating environment in which they could become immersed, in addition to that cognitive retention and the level of engagement where they actually enjoy what they're doing because they're not into that traditional PowerPoint thing, what's being recorded, all of their responses and engagement is being recorded, and then that's what's then analysed to map the gaps and look at what those potential solutions might be to implementing a program of further learning, enhancing policies and procedures and that type of thing. And it's critical that that's done effectively, you know, and that's done in a time frame that enables the company still to train and function as an organisation in these busy times.
So I think what I'm hearing are kind of three real benefits. One, you've got high effectiveness of the training, so it's learning by doing, not reading off a bit of paper. Secondly, you've actually got an audit trail. So if the worst happens, you need to show that you've completed training, awareness and response. You've got an audit trail to show actually this who went with it, and this is actually how they responded in a near live environment or as close to live environment as you can. And the third bit is, with the analytics that's within the platform, you're actually identifying gaps in your current business continuity, cyber, fraud response plan. So you've actually got the feedback loop and to enhance these. So there's actually kind of three benefits from having this on that.
Yeah, it's that very holistic picture that you paint there that you can achieve. You know, if you go back to thinking how the traditional exercises or PowerPoint-driven training was delivered, often by one person, and how do you first of all dig deep into the minds of the individual to get out what you want, and that's evidence that there's been a transition of the learning and knowledge into the practical demonstration that's showing you that they've learnt it. How do you record all of that? And our experience now and the way that we work is that all of that has been recorded in great detail. So it's coming from those individuals, it's coming from the organisation, and then you can evidence that to the organisation. So it's not us just coming in and saying, this is what you're doing wrong, because we designed the exercise to try and bring out all of those elements in there, and it's very effective. It's very effective, and AI used in the correct way, never take the human away from it, is providing us the ability to deliver a comprehensive report, often within 24 hours of the exercise, which is what organisations want. They don't want that in 2 weeks' time, particularly if they're dynamic in terms of responding to potential threats. So.
And how well does this work when you are doing a training session for the more senior levels of staff? So this could be the exec, it could be an exco, or it could even be the board. How does it work at that level?
Well, again, trying to get the board to a training session, because they've all been victims of the previous styles of learning, which we all have, which may not be so encouraging to attend the next time. But I think once we've demonstrated the style of our learning, the boards actually enjoy it and they become very engaged. What we tend to do is mix the roles up as well, so people learn from each other and learn what their expectations should be of other people, and other people learn what their expectations should be of them in those various C-suite roles. So it's very effective. But we can write exercises that train the board very effectively within 3 hours instead of a day.
3 hours.
Yeah, and so we compress that learning time from traditional methods. So a day would turn into half a day into maybe 3-hour exercise. And we're hitting the core issues in a very agile way, in a way that we can give them immediate feedback, which is what they want at their level, and they enjoy it. They enjoy it. They see it as a bit of wargaming. They're not sitting there looking at a presentation. So we have some tremendous experience operating at board level, some very enjoyable stuff as well. And the good thing as well is that they enjoy it so much they invite us back. So, you know.
And I think on the effectiveness bit, it is, you know, the value that strikes me from what you've talked me through is that the live exercise really flashes out what's on paper versus what actually happens in reality. So the person you think on paper is nominated to speak, whether they can, because my understanding of this experiential learning is it applies as much pressure as if it were a live event because of the injects that are coming in, the interaction. So it really does stress test what you think is documented in paper.
Yeah, it does. And you can simulate any situation really, you know, and stress and time pressures and all that sort of stuff. And not just have one incident running at one time. There could be other issues, as often there are. And of course, no crisis really happens on a Monday to Friday between 9 and 5. You know, it's after 5 o'clock or at the weekend. So you simulate all of the things, you know, around the elements that would really stretch the organisation, because inevitably that's probably the way it will happen. But, you know, let me come back to you in your position that you held previously in your last company. You know, I come to you and say, Matt, I can give you a really good PowerPoint-led presentation over a day. For all your execs, but you've got to take them out to a place and you've got to keep them there for a day and, you know, blah, blah, blah. Or, Matt, I can come to you and it's possible we can either train you in person at your premises or we can do this remotely and have the same effect, same results. But we can do this in half a day or 3 hours. But at the end of it, you're going to get a report that's solely based on the input from your staff around their perception of their weaknesses or not even their perception, but where their actions evidence strengths and weaknesses. And then from that, you can implement whatever it is that you need quite quickly. So it's really about, you know, me persuading you that we want to engage your staff in something that's a little bit different and realistic to your operations, not just sit there with a PowerPoint as historically. You know, PowerPoint's got a place, right? But unfortunately, you know, my experience nowadays is that people have moved beyond that in many circumstances, and then their brains need to be engaged in a different way, and you need to engage them around nuanced circumstances that's relevant and not generic.
And so what we're talking about with the experiential learning, we're delivering more value in a time frame that works for whatever level of management, be it senior management, exco, or potentially even the board, with those three kind of value streams coming out. It's kind of it's the actual training itself. It's the destruction testing of what you think you would do if an incident happened, plus also that kind of feedback loop and the evidence seen to show actually we've done this. So it's providing that audit material for whoever's accountable for ECTA compliance, so they can evidence actually this part of training and monitoring and response is actually kind of fully factually evidenced.
Yeah, and I think historically, again, you know, you've had certain companies, big companies, go in there and deliver this stuff, and they've charged a fortune for it. And you know, the only thing I can really say is I think, you know, a lot of companies nowadays, and we deal with some big companies and organisations at government level as well, is that they are attracted by, well, people like us really. There's you know, partnerships of organisations with really specialist skills in areas, whether it be L&D, crisis management, the combination of both, so that you can offer this very bespoke personal service where a meeting doesn't cost actually, you know, and you're not charging them a fortune because what you're saying to them is, look, you know, you have to pay for our time, but we can reduce that time considerably, and we can be very effective in that time period as well. And I know we've spoken about this, and we looked at developing something ourselves around, you know, a solution for this. And I think, you know, what we've spoken about, we have got a reasonable solution actually for it.
Well, I would go and beyond this. So I think we've kind of developed something I think is very unique. I mean, when we've talked about, so that this kind of response part of mitigating, not just kind of ECTA, that is the focus at the moment on failure to prevent fraud, but it's equally applicable to the other corporate criminal offences. It's part of sound fraud risk management. This is now table stakes. And with the regulations that are now in force and renewed government focus on corruption and response to corruption as well, having something like a response plan that, as I say, it is actually not just in place, but you can confidently say it has been tested, it's understood, we can demonstrate a feedback looking to improve it. It's no longer a nice to have as part of, say, fraud risk management. It is table stakes. You can't completely mitigate against a fraud incident like this happening, so you do have to be prepared that if it were to happen, what would we do? And as you say, Laurie, a bland training session or a read-through of a policy or even a paper tabletop exercise might be fine, but my sense is that's not going to be robust enough to show that we really took this seriously. We know we can mitigate.
No, and you know, I think our experience has proven that already, because you know, when we've delivered a lot of exercises, there's been a specific purpose to evidence this for an auditor or somebody else or an insurer, whatever it might be. But there's no question nowadays that you know, it's not if, it's when. I think, you know, certainly in the cyber world, sadly, and that's not trying to you know, be scare tactics, but there's this whole shift now to taking responsibility that's got to be evidence. That's the key thing. And boards cannot hide from this, you know, because it's the regulators and law and legislation is putting pressure on. But lots of people are calling for, like, the CEO's head now, public inquiry. You know, in addition to the compliance and regulation, you've got other factors that are really affecting, you know, am I going to be able to keep my job? You know, the press are in there. You've got you've got solicitors now that are encouraging people to claim against companies if they've been a victim in a data breach. You know, the world has changed, you know, and this is about ensuring that your organisation can deal and try and bat off some of those issues and do the right thing for the customers.
And I completely agree. It's about reducing the overall risk to the organisation, and it's about reducing, you know, the risk to individuals, so personal culpability under some of this legislation. So overall, this is just going to sound risk managed by evidencing you're doing the right thing.
Yeah. So look, Matt, we've gone on a journey from the times that we worked together. Unfortunately, no stories about any of that, which is good. We've gone on to your time in the insurance industry, in which you developed a huge amount of skills, which you're now taking into the private sector. And look, your company is successful in terms of its visibility, what you're doing, the excellent advice that you offer. And I hope that you know, today has been enlightening for some people in the insurance industry or other sectors that realise that the ECTA doesn't apply to the insurance industry. It's across all sectors in terms of their corporate responsibility. But thank you very much again for being a guest on the Cognitas Global podcast.
Thank you very much, Laurie, and let's make a difference.
Let's do it.